From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for October 16th, 2017. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading, and I'm going to highlight some of the key levels we will be looking for entry and exit opportunities. And as always, be sure to use appropriate risk management strategies in all trade setups. Let's get started here on the USD CHF, the US dollar versus the Swiss franc. We're looking at the daily time frame. Two different trends we want to talk about. The blue trend line, longer term downtrend, almost a year ago now. We're looking back to November of 2016. Long-term downtrend. That's very important for our trading this week because we've come up over the past week or so and challenged that blue trend line. We look to the right-hand side of the chart, and I'll zoom in one time. You can see the red trend line. For over the past few weeks, we have been in a rising trend. So we've risen pretty sharply up to that blue trend line again. Follow the green shaded area, the green zone right in the middle of the chart, 97.50, 97.65 back in time. We can see that this is an area of major resistance. You go back here where the blue circles are resistance, resistance, resistance. Even in the most recent weeks, we've seen resistance where this blue box is within the rising red trend line into that same green shaded area. What's important about that today, at least, is that we're sitting just underneath there for the past 1, 2, 3, 4 days. Past 4 days have found resistance underneath 97.50, 97.65. So that's going to be a very important level for us today and maybe this week. Let's go ahead and zoom it in one more time. So let's look at that green zone. We know that right now, for the past 4 days, it has found resistance there, 97.50, 65. And for it to go higher and challenge the blue trend line or even test the blue trend line again, the pink shaded area, 97.95, 98.05, is going to be an imperative that it breaks through there, which it hasn't done yet. If it doesn't, resistance could send it back lower again, 97.20, 9700. The yellow zone would be our closest support, and then for it to continue to go lower, it would need to break through the yellow shaded area. So some very interesting facts about this. The pink, the green, and the yellow zone are closest areas of decision making here for the dollar franc. One last thing here. Let's take Fibonacci from the low to the high of the most recent uptrend. 236, 97.38 happens to be where today's open is, right around that 97.38 level. So very interesting there. 382 much lower, all the way down here closer to the blue shaded area and the 100 period moving average. Let's take it down to the 4-hour time frame. Of course, we look at the Forex Black Book at the very bottom of the chart. We see that as green, giving us somewhat of a bullish bias. But again, I think if we're going to see it go higher and turn back higher for the US dollar, we're going to need to see it get through this green shaded area, which obviously it hasn't. So if you're a buyer, that's what you're looking for. You're looking for it to get through 97.65, target the pink zone or higher. If you're looking to go short on this currency pair, we're definitely looking at this green zone, watching for some clues that the sellers are coming back in. I don't think we have enough evidence of selling pressure right now, but definitely watching for that today on the dollar franc. Moving on to the euro dollar. I think we're really actually just the opposite. Black trend line uptrend, red trend line downtrend. We've been studying this downtrend for a few weeks now. We've actually been studying the pattern setting up at the top of this trend. If I zoom it out a little bit more, and even go out a little bit more to kind of blur the lines a little bit, the black trend line. But really what I want to show you, these top boxes up here, the blue, the black, and the green. We've been studying that in the live trade room and trying to discover opportunities for resistance and reversal, a potential head and shoulders pattern now that we've broken through that black trend line. Now we can zoom it back in and you can see that orange shaded area as resistance within the potential head and shoulders pattern. So orange zone 1.1860, 1890. In fact, last week we took the short there. You can see the trade going down there at the very bottom of the chart, 1865. Currently sitting with about 60 pips of profit. We definitely would like to see the breakdown of 1.1800. If it can get through 1.1800, we'll look for it back down into the low 117s, this blue shaded area that sits down here. That becomes our next potential support. And if it can break through there, then I think we're looking for further reversal for the euro dollar. So very interesting setups here. The risk, of course, is a break back above the orange zone, the red trend line. So for the week this week, as long as it's under that orange zone, we're concentrating short, as we are right now, only if it breaks above, we'll call it 1.1890, could be 1.19, the orange shaded area. We'll look for this to go higher. It doesn't really change as we get down to the 4-hour time frame. Just looking for that breakdown of 118 today for the euro dollar. Moving on to the GBP USD, we've had a significant retracement really of the black trend line. The black trend line was a pretty significant fall for the pound dollar, and now we see a significant rise. 1, 2, 3, 4, 5, and now the 6-day more on the rise than it is on the fall. Interesting enough, the Forex Black Book turned red today, so we'll have to see if that is a sustained move, any move higher. But right now, right into the 50% retracement level of the black trend, so we're halfway into that reversal or retracement. So we'll look for 1.3315, 1.3350, the pink shaded area, to be our area of decision early part of the week. So as long as it's underneath there, let's go ahead and put an arrow there, we're looking at resistance. And only if it breaks above there do we look for it to go higher. So right now, 33.1550, the pink shaded area, is our area to watch. Underneath it, may look for it to go back down. Above it, we continue some pullback for the pound dollar this week. Let's go ahead and take it on to the USD CAD. Again, two different trends we want to look at. The the red trend line first, long-term red trend line coming from all the way at the top of the chart. We can see it's been bearish, and only the black trend line has been a significant rally and push back towards that red trend line. Zoom it in again here on the daily time frame, and this area right here between the orange, the green, and the pink shaded area, let's go ahead and see if I can draw a box in here like this. I'm going to just highlight this area right here. Let me change it to a box. I'll make it a black box here so we can really see it easily. And that area right there, highlighted inside the black box, is what we really want to focus in on this early part of this week, because obviously there is support at the orange zone. And if the black trend line is going to take hold again, the buyers are going to take hold again, we're looking for it to stay above the orange zone, get back above the green zone, and then we could look for it to challenge the pink zone here as resistance, 126, 26.30. Anything above the pink zone, I think we're looking for further movement higher. And of course, all of that would change if the red trend line, the sellers come back in under the orange zone. We look for it to go back lower. So if we're going to buy, let's call this a period of congestion, a range, whatever you want to call it, orange, green, pink. I think if you're going to sell it, the pink zone becomes a better idea. If you're going to buy it, the orange zone becomes a better idea. And this green zone is just kind of the midpoint, the pivot. I don't want to use the word pivot. Let's call it a hinge point. Let's call it that. Anything above the green zone, 25, 35, we could challenge the pink zone. Below the green zone, may head back down to the orange zone. Let's watch our news this week for some directional purpose for the dollar CAD. Moving on to the USD JPY, we have had a significant pullback of the uptrend. It's been an uptrend. The blue trend line shows us that. It's been an uptrend for a while. Went into a period of congestion inside the black box. We've now had a pretty decent pullback of that uptrend just underneath the 236 fib. 382, by the way, sits down here closer to the 100 period moving average, and we're talking about the blue trend line here, low to high. The 382 sits at 111.10. That's the orange zone, and by the way, where the 100 period moving average sits. So the question is, will we see it touch that before going higher? Will we see it break that and continue to go lower? We don't know yet, but definitely some areas that we want to pay attention to, at least first part of the week, is that green zone, 1155, 111.80, where we're currently finding support Friday and so far today. Let's go ahead and zoom it in on that, the green zone. Take a look back here. We found support 1, 2, 3 days, turned around and went back higher. So not too hard to see that as long as it stays above this green zone, we might be looking for some support, just like it did back here. And only if, I think really, if it breaks 111.15, the orange zone 100 period moving average, do we look for it to go lower. Let's go ahead and take it down to the 4-hour time frame. Look at the support that we're seeing already at 111.80, 111.55, the green shaded area. So again, I definitely don't think that this is a good opportunity to go short sitting on top of the green zone. It's found significant support there. Don't go short unless, again, it breaks through that area. Then we might see it back down here to the orange zone. But right now, not a great opportunity to go short. I think if you're going to go short, you'd prefer to be back at the resistance, the blue shaded area. So watching for support, maybe an opportunity for this to go higher. If it's going to go lower, we want to sell rallies to resistance or breaks of support for the US yen. But today, I don't think you want to go short into the green shaded area. AUD USD, we can see that we've had, again, a significant pullback, significant retracement of the black trend. The black trend line is the downtrend. We challenged the 100 period moving average, got back above it, back above 78.30, the yellow shaded area. We're now into 78.80, 79.05, the orange zone. We've seen trading decisions here before. Let's look right here. I'm going to move this black circle right here where we see significant support. So there's significant support becoming today's resistance. Let's look a little bit further back. We can see right here where the black circle is. Again, significant support helping us identify future resistance. Not only that, 78.82 happens to be the 382 Fibonacci retracement level of the high to low of the black trend line. So if I was to take the black trend line and put it right here, that's your Fibonacci retracement measurement there. Let me take the older one off. So the only fib on the chart is the black trend line. And you can see the 382, 78.80. And that's where we're currently finding resistance. So if it's going to go back down again, this becomes a very interesting area for that right around the 78.80 level. Back to the yellow zone. So we're looking at this as resistance. Don't buy into resistance. You don't want to buy under resistance like this because it has the potential to fall back down and retrace back down to support at least the yellow shaded area. And of course, if it breaks back under the yellow zone, we'll look for another challenge of the lows of the black trend line, which is the green zone. And really, the risk here today is the break above the orange zone. So we're watching this orange zone for opportunities today, 4-hour time frame. Look at the resistance we're already seeing there so far this week, holding there. I don't think that's enough to give me a reason to go short, but definitely holding there as resistance, and so far unable to break above it and get back higher towards the pink zone, 79.45, 79.70. So definitely don't buy it right now under the orange zone. You'd want to buy it closer to the yellow zone. If you're going to sell it, watching for resistance and reversal from the orange zone today for the Australian dollar. And lastly, to the New Zealand dollar, NZD/USD, very similar to the Australian dollar. We had the red trend line fall. Now we've had a retracement back to the 382. 7,200 happens to be the 382 Fibonacci retracement level of the red trend line. Not quite all the way back to the 100 period moving average, but definitely an interesting area around the green zone. We've already seen historically, and I'll take this blue circle right here, support and congestion. Let's take the black circle right here. Black circle, blue circle. We've seen congestion, historical resistance, support. We've seen a lot of trading decisions made around the 7,200 level. Let's zoom it in again. 382 fib is there, so don't buy it right now. That's the first thing. We know we don't want to buy into resistance and the 382. If we're going to buy it, it either needs to dip back down to the yellow zone as support, 71.55, 71.40, or break through the green zone. So buyers are either being patient for a dip or a break of the resistance. Sellers watching for an opportunity underneath 7,200, the 382 Fibonacci retracement level of the red trend line, and watching for clues to resistance and reversal. 4-hour time frame, no clue to reversal yet. I don't think this is sufficient evidence of reversal to go back down, but I definitely am interested in this price action where it hit it once here, bounced off, second time here into 7,200. So the main focus here is if it stays underneath the green zone, potential to fall back down. If it breaks through it, we look for the continuation higher for the New Zealand dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.